Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. It's been a pretty slow morning. I mean, all in all, it's been actually really quite slow. And so, with that being said, we have, I mean, this should be a fairly quick update. Stocks continue to grind higher, and we're pushing up against resistance. And really, what happens here in the S&P, in my opinion, is going to influence us for the rest of the day. And what I mean by that is if you look at, this is the S&P, this is the hourly chart. Okay, we had the sell-off yesterday. We recovered the entire sell-off. So this is the Janet Yellen move. We've come back like it never even happened, like the comments didn't even exist. And we're at the 618. So right now, at this point, we have to just identify two, in my opinion, two levels. Okay. And let's get rid of this. Well, you know what? I'm going to keep it there for now, just to make a point. Making a point that this 618 is pretty key resistance intraday. You guys get that, right? Like in intraday, like soon as we open, we're going to come off, or we're going to break out and move back towards these highs, right? So that's all there is to it. I mean, it's pretty cut and dry. So if you're sitting here going, well, I think stocks are going to come down, and I think we're going to sell off because Janet Yellen, meant what she said, and that's a big risk to the market. Okay, however you feel, that's fine. I'm not saying I do or do not agree with you. I actually think that that the market's probably just going to scream higher again because it got everybody short yesterday. But let's say it doesn't. We just roll right back over again. You have very good risk reward to be on the short side here. You do. I mean, for the S&P, maybe you risk above 4,200, and we're at 4186. You risk above 4,200 and be short. Looking for a move back down here to 4110. But if you're bullish and you're like, no, we're not even backing off, then you get long here. You put your stops below the 4165 level, risk 20 points to make a move back up here. However you want to play it. I personally think we're going higher because we're in that kind of market right now, or we have been. So but I'm gonna say for right now, 4,200 should be intraday resistance, and 4110 obviously is going to be support. And then obviously above 4,200 is 42. Well, I think the 127% extension is 4,250 in case we break out. I'm just writing these down. And yes, we're still bullish while we're above 4110. So I'll put an asterisk here. Okay. Let's take a look at, let's start with currencies. So the euro is just consolidating. We're in this little wedge. So if we break above, you can mark the overnight highs, but I'm going to actually mark this high right here, because if we break this high, then we're making higher highs. Get it? So that resistance is at 120, let's call it 120.30. And, the euro dollar came very close to the 1990 support and could dip below while in the descending wedge, but a break of the 120.50 level would be a bullish sign. We dip slightly below, just below the 1990 level, and pop right back up again. So you notice how now we're false breakdowns, higher lows, right? So it's hard to be really bearish as you're coming right into the support zone. So this is all really key. I'm going to write down, oops, 119.50, obviously. That's the lower end of the support zone. 119.80, which would be just a brief new low inside of this wedge. You see, it would do this. Like that. We're in this wedge. Might break out today, actually. Cable. Nice law-abiding triangle going on here. Above the 618 now, which is 139. We're just going to call it 139.35. We break above that, we should go back to at least 140.10. Support 138.40. Oh gosh, you know, I got my Johnson & Johnson vaccine yesterday. And by the way, I feel fine. Like, you know, I'm my normal tired when I get up in the morning at, you know, early and, you know, but it's interesting. Benedict in our chat room, he said his arm was sore for like weeks. He said he like went numb. Same vaccine that I took. Like his arm went numb or hand went numb or something like that for a few weeks. I woke up this morning and I'm like, oh, my back is sore, but it's like feels like it like sore like the way that I slept, not like sore. Like it's fine. I feel completely fine though. But my back is sore. And you start thinking to yourself, is that because of the vaccine? But if I never took the vaccine, all I would be thinking is, oh, I must have slept really horrible last night and my back is sore. So that's kind of how it feels. So I'm not blaming the vaccine. I actually think that it had.
I blame Bush.
I blame Bush. I actually think it's like at this point, but it's been less than 24 hours. I haven't felt any different, you know, still same, you know, arm feels fine. So, but you know, in the past, and I should knock on wood, I've never really had any bad reactions to vaccines. I've taken plenty over the years that I can remember because of the military. You know, I was kind of forced into taking a lot of things. That's where I got Agent Orange, and I lost my left foot. And I'm joking, guys. I didn't. But
I mean, you're old, but you're not that old.
Yeah. No, but I've never felt any. But I'm one of those people too, and my wife would, you know, attest that I just don't. I don't get. These types of things don't really rattle me too much. I'm gonna write down support is 76.75. 77 cents. And then, you know, and I'm writing that down because we had the false breakdown. We talked about this during FA.C.E, you know, a little false breakdown here. Previous resistance, act as current support. You know, we get above 77.70 and then we should attack 78.20 again. So 0.77, 77, 70, 78, what? 20, 78, 20 range. Kiwi, back in the channel again. So what does that mean? That means we get rid of the channel because it's irrelevant. Doesn't mean this upper trend line isn't, but that, you know, the way I had it drawn, not relevant. So maybe this is relevant. Oh, shoot. Maybe that is relevant, which means clone, which could mean that is relevant. I guess that's the way we have to look at it nowadays. Okay, so resistance 618, previous support should act as current resistance 7720 or 7220, sorry, 7220. And then beyond that should take us back up towards 7285. Support is dip. Well, obviously now this horizontal support is very key. Right there. That comes in at 71. Let's just call it 7120 now. Whoops. All right. That's pretty key support. We're in a range. Everything's in a range. Damn it. Dollar Canadian, not so rangy. This is heavy as all get out. I'm really bummed out. I missed my sell up here. So 123.65 or 123.70. That's key to hold. If that, as long as that holds, you have to remain bearish here. And if we break through this support, which is 122.65, then we go to 121.85, 122.65. Okay. Dollar Swiss, 90.80, 92. Same crap, right? Remember the 90.80 is the 200-day moving average too. Just actually, let me make sure I got that correct. It is the 200-day moving average. Yep. Okay. US dollar, Norwegian krona. So I sold this yesterday, and I sold it, and then I covered it real quick. If you were in the chat room, I sold it 35.50, covered it at 33.50. I really would like to see a spike up towards 839. Oops. That's key to keep us bearish. Looking for that move if we can get it. Support, you know, this is, I think we talked about this yesterday. Just in case, just in case we come back, we rally, come back down, and then we hold some sort of, that's the only thing I'd be thinking of if we get a move back down to 824. It's like a little inverted head and shoulder pattern. Okay. Dollar MEX. 837 or 2037 is key. I'm going to keep us in range. Dips down to 20 should be finding buyers. Oh, you know what? I should go back and say, just tell you guys. You guys know if you missed it yesterday, I am long euros. Because of this wedge, it's a very shallow retracement. I think this is really all key support. I think we're going to be bouncing from these levels. And, you know, if we get above 2030, I might actually add the longs. So just so you guys know. I know you see it in the patterns in play, but that's kind of how I'm playing it. I forgot to mention that. I meant to talk a little bit about that today, since I didn't get a chance to yesterday, because it was put on after yesterday, after this webinar. So, sorry, back to dollar yen. 618 is still capping this rally. So that's 109.65 is, I think we're riding. And support, I mean, I still think support is down here, 108.30, 108.40. It's this is an ascending trend line. So I think if we break here, we should come down. But I'm going to write down support as being, 108.40. I mean, I know that 108.35 level has been so pivotal as of late. Dollar index, same. 91.40. Look at how tight this range is. I mean, this is how this really defines the currency market the last 24 hours, right? I mean, this is it. Like if you got up this morning, you looked at your charts and you yawned, that's why, right there. $91.40. $90.85. Oops. I guess, I mean, just in case the dollar takes off, we're going to write down this 161% extension. You see this right here? Okay. This is the 127% extension that's capping us. Just above that is the 161% extension, 91.55, just in case we stab higher. Okay. Gold. Let's move that. We don't need this for now. We know that 1760 is huge support. We know that 1800 is huge resistance. It's just we're stuck there. And if you're Stelios, you're going to keep it with a bullish bias. I'm just kidding. You got to keep it with a bullish bias as long as 1760 is holding. I know you guys hear me say that every day. Silver, this silver got smacked down with the gold market following Yellen's comments yesterday, but $25.60. I know we keep writing this down as support. I can't remember if we write down 25.60 or 25.65. Oh, I wrote 26.35 because of this little breakout yesterday, because we were, trying to break out yesterday. So that's, oh yeah, because we were up here. And funny thing is, we just keep pushing below it, but just with wicks. So I'm just going to widen it up and just say the 27 level is the 50% retracement, right? Support is 25.60. Resistance is 27. Last but not least, Bitcoin. And it was interesting to hear Mark Newton. He's not very bullish on Bitcoin right now, and neither am I. I will, I was talking to, I forget who I was talking to yesterday. And their argument was, Ethereum, Ethereum can be used, but Bitcoin is more of just a, can't. It's more of a just a, I guess it's some of the technology, or maybe just because of the namesake, I don't know. But the guy I was talking to yesterday is like, yeah, Ethereum, is actually going to, you could use it transactionally, and I don't understand the whole argument, but that's the reason why Ethereum is outpacing Bitcoin right now, at least. Now, Bitcoin is just really underperforming, and the fact of the matter is it is underperforming. So I guess what we should be doing right now is just focusing on what would turn it lower at this point. And that's if we start creating these lower lows here. So that support right now comes in at 52.4. And then resistance is at 60K, as you know. Okay, and it is range bound right now. Okay, so there's your bias chart. It's finished. So there you go. And it is a slow as molasses day right now. What do you think, Stelios and Steve? What's up with you guys?
Oh, good here. We're seeing a reversal of yesterday's move in equities because really Yellen didn't mean what she said. I mean, she didn't mean to mislead us in any way. And not much more to say. And I think you said it very, very well yesterday. And I think you tweeted about it that as long as the dollar is not moving, then this move cannot be sustained. And the dollar wasn't moving yesterday. And look, it's coming back.
Stocks just bounce right back.
Yeah.
You know, Tony says, heavy as all get out. Wow, you really are Southern there, Blake. You know, I lived in Texas for 13 years. I'm, you know, like not Southern. However, I did pick up some, you know, Southern verbiage. Every once in a while, I'll whip out a, all right, what are you guys fixing to do today? Fixing. If you ever say fixin', Stelios, they're going to say, wow, look, it's a Greek cowboy.
Oh, yeah. Well, I've got the clothes. Does that help?
I reckon. There we go, Tony. I reckon y'all really mean what you're saying here.
Y'all.
It's, I mean, y'all is very easy to say. It really is. It's like, hey, what are y'all doing? Y'all want to get together later. You know. Are you all going to round up the kids? It's very easy to say. It's a very easy slang term to use. Anyway, so Steve, how's it going?
Yeah, everything is fine, mate. How have you been?
Oh, good. You know, just watching stocks go higher and not giving up the ghost. You know, it's interesting. We sit here in the S&P above the 41, you know, above the 4110 level, or, you know, I've been just referencing 4110. But I'm going to reiterate kind of what I wrote here, wherever it is, you know, here on Trader Summit. And by the way, guys, if you guys haven't watched or seen Trader Summit, it's been a soft launch thus far. You know, Trader Summit, the site has been, we haven't talked a lot about it because we're just adding content. And matter of fact, I got a couple of meetings today with people and regarding this, but this is the whole, you know, synopsis of, you know, that bullish, like parabolic trend. I mean, the longer we sit here and don't pull back, you know, the more frustrated shorts are going to get, and just forcing, you know, especially after yesterday's move. I mean, how many people got short yesterday, guys? I mean, you know, thinking this is it.
Yeah.
And they got short, or they got shaken out of their lungs. And here they are, they you know, this morning.
You put your trust at Yellen. I mean, that's such a huge mistake, right?
I guess, yeah. So anyway, well, guys, just want to say that it's slow out there. The markets are very slow. No one wants to really. I can't imagine anybody after yesterday's kind of move lower in equities and then bounce back today. People are going to be a little bit more hesitant about selling. I know we're seeing some selling coming in, but you also notice that the NASDAQ's holding up better than the rest. And so it's just more, it seems like a little bit of profit taking, a little bit of rotation, but nothing to really shake the tree. So, so anyway, I'm going to let Steve and Stelios take over. Maybe they have some insights that are going to be really groundbreaking for you. But there's your bias chart. Stelios, I'm sure, has already got it up on the site already. Happy Cinco de Mayo for those of you that are drinking tequila today. Try to pace yourself, because that's what we do here in the Southwest. Is we drink tequila on Cinco de Mayo.
Yeah. We do all day long. from dusk till dawn.
Hey, there is nothing like a mid-morning tequila buzz. I'm going to tell you that right now. All right, guys, I'm going to let you go.
Blake,
Steve
funny story.
Stelios,
I've been drunk in my life like 2 or 3 times, but not really strongly drunk, like not knowing what's happening, etc. One of them was actually drinking. Stelio, what kind of drink is metaxa?
I have no
Cognac,
clue.
right?
Coco.
Yeah, cognac. Yeah.
Cognac, I think. Yeah. At late morning in a hotel in Rhodes, where a Russian guy that had the bungalow next to us was like, you know, he had an injury, so he would have to spend the rest of his holidays like in the bungalow. And we went to see him, etc. So he insisted, that we should have a drink with him. So yeah, I know the feeling of being drunk in the morning. Done it only once, but it was kind of funny because it took me half the day to sober up.
Interesting. Okay.
So Stel, give us your groundbreaking insights.
I don't have any. Actually, one thing I keep asking myself last few days: how is the Fed and other central banks and governments going to tackle the problem of inflation?
They won't.
And I have my wife works in a shipping company, and I have
Mm-hmm.
friends who are in shipping. A couple of ship owner friends. They're telling me things are going through the roof.
Of course they are.
Everything. It's like the golden era again for shipping. I mean, they are making huge amounts of money because there's so much demand, and material prices are going up, and it's. I don't know how they're going to contain it. Look at copper, look at corn, look at lumber. Obviously, look at all that.
They
This
won't. They'll keep pretending that it's not
Yeah,
an
but at some
issue, that
point,
it's transitory, blah, blah,
everything
blah.
goes onto the economy. Everything gets translated in goods and services prices already. You're seeing shrinkflation, where they're changing the packaging of items and they're giving you less for the
Yes,
same amount.
it's usual tactic. Instead of raising
Yeah,
prices, decreasing the quantity you buy with the same price.
yeah. I think being in cash is suicide now. These the value of cash is going to get eroded every year
Oh,
after year,
absolutely,
year after year.
absolutely.
So,
And it's going to be of secondary importance if we're talking about the dollar, the euro, because yes, some of them are going to be doing worse than the rest, but in tandem, all the fiat currencies are going to be losing value against anything that has
yeah,
intrinsic
exactly.
value. There is no question about it.
I always liked real
Inescapable.
assets. I always liked real assets. Now I like them even more than ever. It's you gotta have things that are indexed to inflation somehow. So
Yes,
land or even art, even I like cars, stuff like that.
absolutely, absolutely.
Anyway, but
So,
otherwise, market wise, I don't have anything else to say. It's
yeah,
been
market wise,
quiet.
yesterday was the usual. First of all, it's not by accident that we tested at the lows the upper zone of this support area we were talking about. That it's the first area of support, and we rebounded from there. There, of course, fundamentally speaking, somebody can point this rebound to Yellen's 180 degrees turn in her following comments after her initial comments. But really, what did you expect? I mean, they can't even handle the idea of seeing the markets go a little bit lower because they know that everything is built on sand. And, sand in this case is asset prices. And if they let that collapse, everything is going to crumble down like a house of cards. So, even a 1% move, they immediately get scared that it might bring more selling. So they immediately need to make sure that they soft talk the market so this doesn't happen. So, has anything changed? Should we be turning bearish? Let's also look at the 4-hour chart. Now, it all depends. Meaning, let's plot this trend line. So, now, theoretically speaking, somebody can say, against this trend line, we can see another leg lower, which we can. So, if you're, really, let's say, convinced that you should be selling here, at least in the short term, and you're looking at short-term charts, I guess let me also move this one. Let's put this to the highs. Okay, there we go. So if you're really determined to like sell, you can do this against like 4,200, right? The risk reward is appealing, and hope for another leg lower towards initially this 4110 area, and if we break below it, then we open more downside. On the other hand, if you're looking more medium term, there is nothing that has changed having to do with the uptrend. I mean, we still have a series of higher lows. Yes, momentum has slowed somewhat. There is no question about it. But the uptrend is still well and alive. So above 4,200, I think we're on our way to new highs. Now, within that context, looking at the dollar index, okay. Now, this is the immediate bearish interpretation of the dollar index. Or alternatively, we get this. Okay. This latter scenario looks more likely if we actually do get, somewhat more of a risk off in the short term. A push higher towards next area of resistance before we see lower dollar prices once again. So the jury is still out because clearly the markets are failing to follow through. But on the other hand, momentum has waned, so I do understand why somebody wouldn't want to be buying here. Actually, I understand why somebody wouldn't be want to buying here for 100 different reasons, but in any case, I mean, I wouldn't be chasing up here no matter what. So don't forget the big picture is that we still have this large ascending wedge, and the more we consolidate over time, the more the upper trend line resistance moves to the upside, which leaves more space for another leg higher before we reach that, once again, right? Something like this. Okay, so not much to say other than this. We did get Stelio. Did you talk about the silver sell-off we had?
We talked about it in on Face.
Okay, sorry, I wasn't here initially.
Right?
I was on a call.
Yeah, and it's we did say how weird it is that Yellen came out said what she said. I think it was 15 million ounces. It was a ridiculous
no, I think 35
35
million ounces.
Yeah, which got dumped within
3 minutes or something like that. Yeah, which is
obviously the way you want to do it, right? If you're trying to unload the position. I mean,
which is the usual unusual type of price action because nobody really trades like that.
Yeah, exactly. But it is what it is, and the market seems to have absorbed it. And look, today silver was down 1.5% at some point. It's come back up again. So I think it's looking relatively resilient.
Look at platinum, by the way.
What is
we
platinum
talked yesterday about platinum testing the resistance of this wedge, and it did get rejected. So platinum still remains undecided about what it wants to do. For some reason, my gut feeling tells me that it wants to dump lower one last time before we see higher prices. But as I was said yesterday, and as I've said many times, I don't want to be taking the counter trend direction of anything that has real value, precious metals, etc. So although I do believe that we can see lower prices initially, I don't want to be in the other side of this trade. I just hope we do, so I can be in the trend direction side of this trade. Copper reacting with a little bit of a lag. I'm saying this because yesterday we did have quite a negative day. Of course, less negative than it was looking like initially, but still copper couldn't care less, which is kind of weird. We know how copper is nicely correlated with with risk assets most of the times, although I think now it's being driven mostly by inflation expectations. But we're seeing a negative day so far, today, and I would be very, very careful here with copper because we had a triangle. We did expect a break higher in this triangle. We did get that, but remember how many times we've said that breakouts from triangles are very frequently terminal moves. So we might see somewhat of higher prices with 470 being the next upside target, but it starts feeling to me like we might be forming an ascending wedge of some kind here. Also notice the huge divergence in momentum as depicted by the RSI, right? Very, very prominent. So bottom line, copper remains bullish, but I don't think this is the time you should be buying anymore. I think this is the time to start looking like likely for a deeper correction so you can buy at better prices later on. Okay, that's what I think. Now, Bitcoin, quite a big day to day so far. Of course, somebody can say for cryptocurrency standards, you never know. I mean, it's not really a massive day or so. Regardless, the path lower I was thinking about is not broken yet. So I do think there is a chance for one more leg lower. Now, Ethereum clearly still diverging. I mean, I'm not even sure what kind of extensions it matters using here anymore. And notice that RSI doesn't even diverge, right? I mean, we do have a higher high in the RSI as we have a higher high in price. So I don't know for how long this type of divergence can keep playing on. I'm assuming not for much longer, although the big percentage of the audience that follows cryptos is amateurs with zero investing knowledge, which means that things like the nominal price of the asset matters to them because, for example, they don't want to own like zero point 0.1 bitcoins, right? They would rather own 2 Ethereums because it sounds better. It sounds like you have more. So even exclusively from this point of view, I do think that within this mania, the attention and the focus can keep on being more as long as there is no scares on cheaper alternatives, right? And I'm saying as long as there is no scare because I have no doubt that once we see like a big sell-off in the crypto universe, Bitcoin is going to act again somewhat like the blue chip of people that are like hardcore cryptocurrency devotees. So they don't want to, they won't want to abandon their exposure to cryptocurrencies. But many of them, if some big sell-off begins, they might just, switch whatever they have to Bitcoin until the storm passes. So, if that happens, I would expect Bitcoin to overperform, the rest of the crypto currencies, at least for as long as things are in turmoil. Now, having to do with our regular FX pairs, other than the euro that's under pressure once again, and keep in mind, the euro had last week a major reversal, like an evening star formation on the daily, with the third candlestick being of massive proportions in comparison, to recent price action. Right on top of the confluence of the 61.8 and this descending trend line resistance. So technically speaking, quite a massive reversal there, right? Now, do I think that euro is headed to new lows? I think it's very, very unlikely, but I do think that we might, retrace more before we find more strength and finally manage to break out, something like this. So in the short term, it looks like it might remain somewhat under pressure. And that also makes the second scenario we talked about, the DXY, more likely, because you know that the DXY is almost 60% exclusively euro in the basket, right? So euro, and if you add to that the affiliates, by affiliates I mean currencies that are very strongly correlated to the euro, like the SEK, the Swissy, I mean, combined they're like 2/3 of the index. So it's extremely unlikely for the euro to remain under pressure, and at the same time seeing the DXY not doing rather well. So you need to keep that in mind. Now the cable is just consolidating. I don't know if somebody sees something different than I do, but all I see here is another consolidation that doesn't look bearish to me, just above the previous channel that it took us some time to break. There it is. So bottom line, until proven otherwise, I find no reason why I would be bearish the cable, not with what I've seen from recent price action, right? So keep that in mind. Of course, the fact that these two look somewhat different in paths explains also, and I forgot to mention this yesterday, which I did want to do, brings us to the euro pound, because the euro pound seems to be breaking down once again, if you ask me. And if you ask me, that means that probably this rebound higher in the euro pound was corrective, right? You can clearly see here, this looks like a pennant from which we're breaking down. We actually broke down yesterday, and that, unless proven otherwise, I think is bound to lead to new lows. Okay, let me go through some of your questions. Okay, let me open the windows. There we go. Steve Stell, DBA and DBC, AGS and commodities. It looks like breakout above 18. Let's have a look. You said DBA.
That's the agriculture ETF.
Yeah.
DBA.
I mean,
those ones have the problem of contango because they're using futures on.
Yeah, but look at this impulsive move, huh?
Yeah. But you have to time it. You have to time it. Look, if you go back, look how little we've retraced.
We've retraced actually.
And
I mean, people that think that that's it, and it's too late for this move. Now, let me be clear. Would I be buying here? No, I wouldn't. But would I be looking to buy retracements? Yes, I would. Because just put this in context, right? And you'll understand how much we can still retrace. By the way, this was an easy.
No, but the thing is, though, Steve, we've retraced this much, and commodity prices may be higher than when they were on the other peak because of contango, right? So
because of contango, I know
it will never go back to where it was unless
obviously
we get
$50
corn. But
which I wouldn't doubt, to be honest. I think we might in this cycle we might see prices we've never seen in the past, still, in all commodities.
I agree. I'm just scared of these ETFs which use futures and they roll them on instruments that have a positive.
Look how it has gone exponential, right? Yeah. at some point we need to get something like that before we can continue higher. So keep that in mind. DBC. Okay. Last time we saw it, we talked about something like this. That I remember I said that in this cycle, worst case scenario, it should make it to this resistance area before we see a pullback towards 1637, which is exactly what happened. We didn't make it to the quote unquote worst case scenario, but we did get earlier this pullback to this area of support. You see how price has memory. But now in this cycle, keep in mind, since we didn't end up having a big retracement because we didn't end up pushing much higher, there is a danger, if you ask me, that we might fail from here. So be careful. There is a danger that we're going to see something like this. Now, alternatively, if we persist with so much immense strength, the alternative case scenario is pushing higher towards like 21 and then retracing back to where we currently are. So if we slice through this resistance like it's nobody's business, so like it doesn't matter, you should expect that soon afterwards we should retrace to this resistance and test it as a support. But I would be careful here. I think we're kind of overdone, clearly seeing RSI divergence, right? Persisting for quite some time now. So I would be careful. This area, 18 and a half, 1880, this area, look at this. You don't want to be buying here. I don't need to show you more for you to understand the importance. Let me redraw it a little bit. There, it should be there. There you go. So roughly, yeah, 1840 to 1870, let's say. This is the resistance area, okay? So bottom line, be careful. This area might reject price action temporarily. DGRO. Let's see what that is. DDA. Okay. Core dividend growth. Yeah, unstoppable, right? It's more than clear that trading this, at least for the time being, doesn't really diversify you from trading the S&P. I would assume just by eyeballing it, sorry, wrong button, SPX 500, all new price scale, there we go, there you go, you see it? So, does it really matter if you trade this or the S&P? With the exception of minor divergences, there is one, there is another one. Divergence is not in direction, in extent, right? There is another one. So as you see, with the exception of the peaks and troughs, in which the S&P seems to be a little bit smoother, right? Like smoothened out. I don't think it makes any difference. So, whatever our analysis has been for the S&P, I couldn't possibly produce a different technical analysis to this since they're almost identical twins, right? Actually, they are identical twins because identical twins are not exactly the same. So in that respect, they are identical twins. MP, it is rare earth element. MP. This one, right? Right, Amira? Is this the one I'm looking at? Okay, good. So let's see what we have here. The question is how mature the move lower is. That's the big question mark here. Is it done or not? This was an easy trade here, by the way. Easy breakout trade. Now the question is about this retracement, how mature it is. I think in the short to medium term, you should respect this corrective move as long as we trade below 36.5. That's what I think about this. Okay, otherwise, look higher. I think that's the pivot area you should be looking for to get direction, because the long-term trend is higher, but the short and medium-term trends, the short term is higher also, I mean the very short term, but the medium-term trend is lower since the beginning of March. So, you know, given the prior move higher, there is a chance that we might want to unfold to the downside a little bit more. So I think it should be moving higher. The question is from where and when. And as I told you, I think, you know, this area is a pivot area. AG.
There's still one more. Yeah, AG for Georgi. It's a silver miner.
Okay. Just forget this spike higher. There you go. Higher as long as we're holding this trend line support. Look at the importance of this area, by the way. There we go. There you go. I think this formation is most likely corrective. You can see it. Consolidation, choppiness, mostly correcting over time and not in price, right?
Great, thank you,
Bingo.
Steve. Ah, which one? Bingo. No.
Bing.
That was a comment on what you had said at the time. As in.
I thought because you know they give funny names, you know, to. Okay.
Yes.
Yeah, because you know they try to think of any funny name to give a ticker. To Ingmar was saying BCH plus 20%. Yeah. I mean, they've just exploded higher. PPH says Dimitri. Mark brought it up to PPH. Let's see what PPH is. Pharmaceutical ETF. Okay. This pharmaceutical ETF to begin with seems to have already broken out from there, right? I mean, it doesn't really matter what kind of formation we had because the trend line resistance is so clean. And we probably seem to be forming another consolidation here. So yeah, it hasn't done anything wrong. I mean, I can't tell you otherwise. I think against 67.5, keep looking higher. Now, I'm not ecstatic about the fact that we started consolidating immediately as soon as we broke out. But technically speaking, as long as we remain above this trend line resistance, which might act as support now, and specifically the previous lows here at 67.50, 67.60, you know, there is no bearish argument to be made, right? So if you have to be something here, you have to be bullish. Now, is it the most bullish chart I've seen recently? No, it isn't. But, you know, fact remains that what I said applies. EVR. EVR. Is this the one? Yeah, probably it's the one because we've seen it already. You know, same, more or less same comments like the ones I made before. First of all, we might have not even broken out yet here in this case. So bull trend remains intact, but there is a good chance that next move higher is terminal. And there is also the technical fact here that theoretically speaking, let me show you, this high there, has fulfilled the minimum expectations of one higher high, right? I mean, not frequent to get this type of new high, but it can happen. If we assume that's not the case, which probably it isn't, I would expect that the next high is the last one before we see a deeper correction. So I wouldn't be chasing this higher. That's the bottom line. I wouldn't be chasing this higher. It clearly remains bullish. It has not done nothing wrong. We have a series of higher lows. Momentum has waned. We will probably see another high, but I wouldn't be chasing this high higher. I think you should wait for the next bigger pullback to be a buyer again. LYSCF. Yeah, this is very bullish because oppositely from some of the rest we saw, it is already having a proper corrective move. So once this move is over, and keep in mind, nobody says that it can't take more time, right? But we should see a strong move higher because the this instrument will have corrected enough, at least in time, to then be freer to push higher. Look at the RSI. Look how RSI has worked out the persistent overbought conditions by dipping down even below 40, right? So I think you should trust a breakout from this formation. We should see higher prices towards at least 6, I would expect, following that. But as I said, there is no guarantee that this formation cannot keep unfolding for several more weeks. So keep that in mind, right? There's no guarantee we're headed directly higher, but I think it's a very high probability scenario that this is going to be resolved to the upside, and then it's going to push significantly higher once again. So it looks very healthy chart to me. I'd rather trade something like that than some of the parabolic charts you've been throwing at me, guys, that yes, they are undoubtedly extremely bullish. There is no other thing you can say about them, but they are so bullish and so overextended that it makes you feel a knot in the stomach if you're forced to buy them. You know what I mean? I'd rather trade something like this that has been appreciating in a very, very healthy manner, but at least didn't refuse to have a proper corrective move lower. I would feel much safer holding something like this, even if I am to hold it and not to do anything for a few more weeks, than buying some of the other vertical looking charts. Okay.
Great. Thank you, Steve.
Bye-bye, guys.
Thank you, everybody.
See you again tomorrow.
Bye-bye.